Hello everyone and welcome to another episode of the Pragmatic Investor. Today I was joined by fellow essay contributor Julian Lin, who is the author behind Best of Breed Growth Stocks on Seeking Alpha. We had a great conversation today about REITs and the cannabis sector in particular. We also focused on one of Julian's top picks in the cannabis sector, which is NewLake Capital Partners, NLCP. I really enjoyed this conversation with Julian. I learned a lot about the cannabis sector and REITs, and I hope you will too. As always, if you aren't already following, please make sure to follow on YouTube or Spotify or wherever you're listening. Go ahead, like and share, and please enjoy. Welcome once again. I am joined today by fellow essay contributor Julian Lin. Thanks for coming, Julian.
Thanks for having me, James.
All right, it's great having you here. First question, something that's been on my mind since we talked. There's this word, it's REIT. How do you pronounce that? REITs?
I personally pronounce it REITs.
REITs, right? I know there's a bit of debate around this pronunciation.
Yeah, there might be. I prefer to just call them real estate stocks. That might be a little easier.
All right, I do apologize. I'm based in Spain, so I don't actually talk that much about these things with English people. Now, just to get us started, because this is your area of expertise, for anyone who might be new to this area, tell us a little bit more about REITs, real estate stocks. What is a REIT or REIT?
Yeah, so a REIT refers to a real estate investment trust. In plain English, it's a stock version of owning real estate. So in general, you're buying stock in a company that would have a management team operating a real estate portfolio. From a operating perspective, they're required to distribute 90% of their taxable income to shareholders through dividends, making them a very popular stock among dividend investors just because their dividend yields tend to be higher than the market.
Okay, great. Now, you write a lot about REITs on Seeking Alpha. One that we did talk about before coming on the podcast was NewLake Capital Partners.
Yeah, so NewLake Capital Partners, that's stock ticker NLCP, is a cannabis REIT focused on owning cannabis, mainly cultivation and dispensary properties across the United States. NewLake Capital Partners is a triple net lease REIT. What that means is that these leases are they're structured in a way where the tenant is responsible for real estate taxes, insurance, and maintenance capital expenditures. That's an important detail because typically when you think of a REIT, for example, if you're thinking of a shopping mall REIT or a shopping center REIT, or even apartment REITs, these tend to the real estate operator typically pays for all of those things. They typically have significant maintenance expenses. But when the leases are structured as a triple net lease, the real estate operator does not have to pay for these. This makes it so there's a high degree of free cash flow conversion. So just to illustrate how that's important, typically we might use this term called funds from operations when we value REITs. There's a lot of adjustments, but the main idea is that is simply GAAP net income plus depreciation. The idea is that real estate tends to have a great deal of depreciation. Depreciation is because you're owning this asset, but that's a non-cash charge. So if you are not a triple net lease REIT, you're still going to have to deduct maintenance capital expenditures from that number. But in the case of NewLake Capital Partners, because it's a triple net lease REIT, when you see FFO basically adding depreciation to net income, that is basically free cash flow for the company. So the reason why I like NewLake Capital Partners is because it's offering basically a way to invest in the long-term growth opportunity of the U.S. cannabis market. And I'm not sure how all listeners feel about cannabis, but this is a plant that has been gaining traction in recent decades. It's already been legalized now in 23 states. Now that Minnesota recently legalized the plant for adult use, and that is to say legalized for adult use in 23 states, but it's being legalized for medical use in many more states. Personally, I have found cannabis to be have a wide range of medicinal benefits. Personally, I like it for insomnia, anxiety, and chronic pain. It's something that has been controversial for many centuries. However, it's been around for thousands of years, and it's to me, it's a wonderful thing. I think it's just a matter of time before the whole world realizes about. Obviously, there are the risks, but I think it makes more sense to legalize it. But in any case, the U.S. cannabis sector has been in a downturn for about 2 years after they peaked in 2021. Back in 2021, all U.S. cannabis stocks, this is including stocks selling cannabis, this is including cannabis real estate companies, the most popular being Innovative Industrial Properties, stock ticker IAPR. They all soared to all-time highs because there was hopes that with a Democratic president and Joe Biden and Democratic majorities in the Senate and the House, the United States might decriminalize cannabis on a federal level. But as to listeners who are familiar with the U.S. political system know, it's not so simple to pass anything in politics, especially because of the filibuster rule. So even though the Democrats did own the majority, they didn't really control the politics just because they didn't have enough votes in the Senate. So it turned out that legislation did not materialize. So that hype fades away, and then also some pricing pressure hit the market, and a lot of these post-pandemic growth rates proved to be disappointing to investors. So a lot of these stocks are down 90% from their highs, very similar to how tech stocks have fallen. But just a lot of it due to near-term headwinds. But with NewLake Capital Partners, this is an interesting case because unlike those stocks of U.S. cannabis operators, NewLake Capital Partners, it pays a big dividend. Recently, it was yielding over 12%. This is a name which generates substantial free cash flow and has virtually no debt on the balance sheet. Not to mention, it's receiving fixed rent payments that increase, and we'll talk about the growth in just a moment, but it's a bit higher on the capital stack, than the typical U.S. cannabis operators, just because the cannabis operators, their fortunes will fluctuate based on the market price of cannabis, whereas NewLake Capital Partners is just the real estate landlord. They're just getting their fixed, very, very stable rental income. So one challenge faced by the operators, the ones who are cultivating and selling the plant, basically the tenants of NewLake Capital Partners, is that because cannabis is illegal on the federal level, they have limited access to capital, which has led to double-digit yields on debt, and also they have to pay what is known as 280E taxes. The lowdown is that they're unable to deduct operating expenses from taxable income, meaning that sometimes even if they have no operating income, they still have to pay income tax. So even like the top operators, they're paying 40-80% corporate tax rates. This obviously leads to very, very low GAAP net income, or no GAAP net income in most cases, and basically no free cash flow. Not to mention, a lot of these companies have substantial amounts of debts just because they were expanding very rapidly amidst the pandemic. NewLake Capital Partners, on the other hand, does not have to pay that 280 taxes. That explains why plus it has no debt, basically. So that explains why it's able to generate so much free cash flow.
Right. So you make some good points there. First of all, just going back a little bit to the triple net lease, I guess the big advantage there is, like you say, you don't have some of those other costs that other type of leasing would have, since you're kind of putting those on a third party, right?
Yes, yeah. So and that third party would be the tenants. So the idea is that from from an investor perspective, it just makes it easier when you're trying to value or determine the financial safety of the investment, because when you see that FFO, that number where it's GAAP net income, adding back depreciation and amortization, that is going to be essentially free cash flow for the company. And as of recent prices, NewLake Capital Partners was trading at around a 12% yield, around 8 times earnings, 8 times free cash flow. That's extremely cheap. For comparison, you could compare both to the tenants' valuations. So the stocks of U.S. cannabis operators were recently trading at around 6 times EBITDA, which is a little different than saying 8 times earnings. Because remember, these companies, they have substantial interest expense, substantial tax burdens. And if you were instead to compare to other net lease REITs, for example, Realty Income is trading at around 15 times FFO earnings, right? So on the basis of earnings, NewLake Capital Partners trades at a 50% discount, to the typical net lease REITs. But I can make an argument that it should actually trade at a premium. And that reason is because of 2 factors. The first one is the acquisition cap rate is much higher for NewLake Capital Partners than the traditional net lease REIT. So acquisition cap rate just means when they're acquiring new properties, they're able to acquire them at a higher yield, at a better valuation. Just because cannabis operators have limited access to capital, so whereas Realty Income, the very popular Realty Income might be acquiring properties at maybe a 6 or 7% cap rate, NewLake Capital Partners is instead acquiring properties at a 12 or 13% cap rate. There's a big difference there, and that has big implications for how accretive and how fast these companies can grow. And not only that, these leases carry higher annual lease escalators. So whereas Realty Income, their leases might grow at a rate of 1% per year, NewLake Capital Partners leases grow at a rate of around 2.7% every year. So right now the stock is trading at a 12% dividend yield. It makes it hard for the company to issue stock to acquire new properties. So the external growth opportunity might be a little bit muted, but based on just in-place lease escalators, revenues and earnings could grow at a low single-digit rate, around 2.7 to 3% every year, which is quite good, for a REIT. Typical REITs nowadays, a lot of REITs are not showing much growth at all, just because one, their typical lease escalators are very low, and also they're dealing with having to refinance debt at much higher interest expenses. But NewLake Capital Partners, again, has very minimal debt, which is very unusual for a REIT.
Right. Yeah, that makes a lot of sense. It makes some compelling arguments there. I am looking at the chart here, imagining someone says, okay, I'm going to check out NLCP. And you were talking about how there was that peak around 2021, right, for cannabis stocks in general? Is that about right? Is that about the date you gave me?
Yeah, right around there. And it's been in free fall ever since.
Looking at the chart, though, we did get, the stock has come down quite a bit, especially I'm looking here starting February 8th, 2023. So quite recently, we actually had quite a big drawdown. Was there any particular reason for that? Anything coming out in the earnings? And just in general, why do you think, this stock seems quite undervalued?
So I think there's great pessimism regarding the credit quality of the tenants. As mentioned earlier, they have quite a bit of debt. These U.S. cannabis operators have quite a bit of debt, and they also have may not be generating so much free cash flow due to the high interest rates they pay on debt and the high tax rates they have to pay. But I think what the market is missing, again, is just the long-term opportunity in cannabis, right? Like right now, even in my home state of California, California has legalized cannabis for adult use sales, but I think it's important that because cannabis is still technically illegal on a federal level, the average person still kind of views cannabis as a bit of a taboo. They still think, this is a hard drug, this is like cocaine or something that you can't really talk about. When in reality, cannabis, the science shows it's safer than alcohol by magnitudes. It's again, it's got a lot of medical uses. So like even in California, the demand is still being held back by this taboo negative stigma.
Mm-hmm.
And so what that means is all these legal operators, they're kind of having to compete in a very small legal market, as well as competing against illicit operators. So yes, their profit margins are going to be lower in the near term, but because the long-term opportunity is so significant, right? I don't really see a situation where the legal operators have to like shut down business and they're unable to find new capital to service their debt or to help fund more expansions. So like this is a case where someone from the outside looking in, they might just see how all the stocks of the tenants keep going down. They're down 90%. They just assume, oh, these are all going bankrupt.
Mm-hmm.
But the way cannabis works is that in most states where it's legalized for adult use or medical sales, they tend to use a limited license model where only a handful of operators are allowed to sell cannabis legally. So that helps create some regulatory barriers to entry, not to mention it tends to be very difficult to approve new cultivation facilities coming online just because, I mean, the smell of cannabis is not necessarily very popular with everyone. So if you start building this everywhere, all the citizens will start to protest. So
Mm-hmm.
this is not really that there are long-term structural reasons why this could be a long-term sustainable business models. So the idea is that I am the view that yes, while the stocks of the U.S. cannabis operators, it does make sense that they had fallen quite a bit just because their business models might be a little more cyclical. They struggle to generate free cash flow. I think they're probably going to have to be quite a bit of equity offerings in the sector just to help resolve their debt problems.
Mm-hmm.
But in the case of NewLake Capital Partners, they don't really have that same risk because as long as these businesses are still operating and paying rent, NewLake Capital Partners, everything is the same. And as if these tenants choose to conduct equity offerings to shore up their balance sheets, yes, that might hurt the stock prices of the tenants in the near term just because of the dilution. But it helps NewLake Capital Partners because their tenants become higher credit quality.
Okay, so we've talked a lot about the cannabis sector. NLCP obviously involved in this sector, but this is, of course, also a real estate investment trust. And there's been a lot of talk lately about real estate, obviously people looking for some kind of a crash in the housing market, and also a lot of talk about how commercial real estate in particular might be more affected. Is this something that concerns you at all?
Well, I would of course imagine if there was a crash in real estate prices, you would definitely see the real estate sector undergo some turbulence. It's definitely possible, even though I view NewLake Capital Partners as, again, it's already trading at a substantial discount, to traditional these REITs, even though it probably should be trading at a premium. The properties it owns tend to be, one of the few properties in the states that they operate in. So this is not really something that like, oh, just because the price of a 7-Eleven property goes down, that shouldn't really affect the value of the property of these cannabis real estate. And so NewLake Capital Partners they do have one struggling tenant, Revolutionary Clinics in Massachusetts, which hasn't been paying rent, but and that accounts for around 10% of rent. But at the same time, management has indicated that they believe that those issues appear to be more near term in nature. Just because there was some timing of the harvest, and as they begin selling into adult use sales, they expect that tenants to improve their financial prospects materially. But more importantly, just a couple quarters ago, NewLake Capital, or was it, and also IIPR, they were able to sell properties in Pennsylvania basically near cost. Right, this is only a couple months ago. It's just illustrating that in spite of the fact that these stocks trade at very, very low valuations, the property values have pretty much held up. And which again makes sense just because of the limited license model, the long-term opportunity in cannabis, as well as just the attractive fixed income opportunity here. So to illustrate what I'm expecting from a growth perspective, so you could just look at how IAPR was able to grow their cash flows and their dividends. Every year over the past 5 years, they were able to grow exponentially just because, again, the cap rate, when their cap rate is so high, it makes it so you could generate substantial amounts of growth just by acquiring new properties. Again, it's going to be difficult for them to issue stock. So, they are going to need a little bit of some multiple expansion in their stock price in order to be able to really start issuing stock to buy new properties. But I could see, at least 3% growth coming from those annual lease escalators. That's every year. And then, assuming some multiple expansion, growth could be in the double digits, which is incredible for a real estate company. And the double digits just from, issuing stock, buying new properties, or even issuing debt to buy new properties. And you're starting to look at a company which, because it's trading at a 12% dividend yield, you throw in, around 10, 15, 20% growth. You throw in multiple expansion. I see this eventually trading at a 5% dividend yield or lower. And maybe over time, that's 5% annually of multiple expansion. And then you throw in a 12% dividend yield. You're starting to look at around 25 to 30% annualized returns for, the next decade, which is basically like the kind of returns you might hope from a tech stock. But again, this is a company with no debt. It's already trading at a 12% dividend yield. It's a very wonderful risk return proposition, as long as you get comfortable with the implied risk in the U.S. cannabis sector.
Now, you talk about how, now, I'm not an expert on rates, so you talk about how they're going to have trouble issuing stocks. It seems stock to grow. It seems like they're in a bit of a catch-22 because the stock price is down, but without issuing stock, they're not going to be able to grow. And if they can't grow, then what's going to push these valuation multiples up?
Yes. So, of course, growth will be much stronger if the valuation was much higher. But it's not the end of the world if we have to wait for multiple expansion because, if the stock stays low, again, as an investor, you just get your dividend, you can reinvest at a very high yield. And at some point when the valuation improves, you start looking at, the catch-up gain just because you're able to reinvest the dividends at very high yields. So I'm not too concerned with the fact that growth will be slow right now just because the stock is so cheaply priced. And because I think if there's one thing that's been certain, on Wall Street is that investors really love dividend stocks just because there's this intuitive feeling of passive income, right? So if NewLake Capital Partners can just keep executing, basically keep showing that they could keep generating consistent cash flows, they could keep, growing their cash flow base, keeps, increasing their dividend. At some point, the dividend investors, they will recognize that, why are they avoiding this 12% dividend yield stock, which is growing at a 2.7% rate, even without any external acquisitions? Why are they avoiding that stock but buying stocks like Realty Income with like a 5% dividend yield and like 2 or 3% dividend growth? At some point, that disconnect needs to be resolved.
Of course, that makes a lot of sense in the long run, right? But you know what they say, the market can sometimes stay irrational quite long. Hopefully, this is one of those instances where the market stays irrational and gives us a good buying opportunity, right?
Yes, I think I might have a different opinion if, for example, the debt position was very high. But in this case, again, this is a very crucial to the bull thesis, is that debt is minimal. I think they have like $1 or $5 million of debt. I assume this is just to test out their credit facility. Again, this is a small company. but they don't have any debt, which substantially limits the downside risk. Even if you assume that, they have to take a big haircut on revenues, which again is not really a base case that I am factoring in, right? I mean, rents could fall, maybe 50%, and they will still be trading at a discount to realty income. So this is a case where, a lot of the tech sectors have rallied. I mean, I'm still bullish tech, but clearly valuations are not distressed as they were maybe just 1 year ago. But I am of the view that NewLake Capital Partners is pricing in a great deal of pessimism, when in fact this is a hidden growth story.
That makes a lot of sense. I'll definitely be looking more into that. Now, I also wonder, because obviously you know a lot about the cannabis sector, are there any other interesting names and opportunities there? Personally, I at one point did own a little bit of a stock called TrueLive Cannabis. I don't know if you're familiar with that one.
Yeah, so TrueLive is actually a tenant of NewLake Capital Partners. I'm quite familiar. TrueLive is a dominant operator in the state of Florida. They're a dramatically different business than maybe just a couple of years ago. TrueLive used to be the most profitable operator in cannabis. They were GAAP profitable. They were generating a lot of profits, but unfortunately, like many operators in the cannabis sector, they kind of became a little greedy. They tried to expand their footprint to become a bigger operator. So they took on a lot of debt to acquire a company named Harvest that gave them Arizona, among many other states. And, when they got bigger, their revenue grew bigger, but then their profits vanished. So they're undergoing a process of, ironically, getting rid of a lot of their unprofitable operations. But I think elsewhere in the sector, among U.S. cannabis operators, I do like a stock named Green Thumb Industries. That's stock ticker GTBIF. This is one of the few cannabis companies that is still profitable on a GAAP basis, and they've been, consistently generating GAAP profits. A crucial reason why they're generating GAAP profits is because they have substantially less debt than peers. So they don't have to pay so much interest. That tends to be the main differentiator between this and other companies. But elsewhere in the cannabis REIT sector, I have mentioned IIPR, that's Innovative Industrial Properties. That the main difference between IIPR and NewLake Capital Partners is that IIPR is listed on the major exchanges. I think it's the New York Stock Exchange. So that means that it does have greater liquidity. But on the other hand, that greater liquidity means it does trade at like a 20% premium to NewLake Capital Partners. So I guess depending on the type of investor you are or how much capital you're managing, I mean, IIPR or NewLake Capital Partners, they might achieve a similar objective, but one may be more feasible than the other.
Right, I see. That also makes a lot of sense. It's been great talking to you, Julian. I've learned a lot about REITs, everything except how to pronounce that word. I'm still not convinced. So, Julian, you are on Seeking Alpha as best of breed growth stocks. Before we log off, please let everyone know what you do there, and also where they can find you on Seeking Alpha and if anywhere else.
Yeah, so I run a financial investing group named Best of Breed Growth Stocks. I have a portfolio where my primary aim is to achieve a high amount of alpha, but with a high probability, high success rate. So we're not really shooting for moonshots. We're mostly shooting for above market returns, across the portfolio. So if you like NewLake Capital Partners and you wanted my other picks, you definitely could check me out at Seeking Alpha under you just look for Julian Lin or Best of Breed Growth Stocks.
All right, great. Well, once again, Julian, it's been great having you. Everyone listening, do yourself a favor, go check out Julian on Seeking Alpha, and I hope we can do this again sometime. Once again, everyone, thanks for listening to The Pragmatic Investor. If you aren't already, please go ahead and follow me on YouTube, Spotify, or wherever it is that you're listening to the podcast. And remember that if you'd like more content on investing, I do a lot more on Seeking Alpha. You can find me there, James Ford, the Pragmatic Investor, where I cover crypto, the macro outlook, international stocks, and so much more. Thanks for listening and have a great rest of your day.